Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
ICE Brent crude oil futures. An impressive countering bearish engulfing pattern yesterday after the previous session's only slightly less impressive key reversal up and third bullish white soldier. All this together has made the last two sessions into a pipe top. Now the top side was once again capped by the combination of the gold highlighted flatlining long moving average overhead, currently at 81.72, and the congestion at 81.86, and so turned lower, pushing down through lesser Fibonacci lines at 79.76 and 80.59, the mauve highlighted medium moving average, currently 79.70, the recent 50% Fibonacci line at 78.32, the 50% Fibonacci line of the April 21 to March 22 move at 77.54, as well as the dark blue lower time currently at 76.70 of the significant, breached, but since repaired mid-April to early July bearish shift pitchfork, and all the way down to the green declining short medium moving average currently at 76.38. However, these last two managed to turn prices back up, closing over both of them. Overall, there are three patterns here to pay close attention to. The first one is the previously mentioned mid-April to early July dark blue breached but repaired bearish shift pitchfork. This pitchfork indicates the approximate bearish angle of attack of this market. The second is the start of September to date double bottom type pattern, which I had previously mentioned and also has had enough of a move that I laid out a primary target X in the 80.22 area, which was achieved on Monday this week, and a secondary harder to reach target X1 up in the 81.83 area. Now that's not too far away from the congestion 81.86 and the gold long moving average. Now after yesterday's actions, I'm considering retiring target X1 purely because of the move. Finally, perhaps least of all these three, is last week's weekly key reversal up, for which we saw a pretty good follow-on higher on Monday, and I suppose yesterday's actions might remove that pattern from the agenda. Now, so far today, a higher open around the 50% Fibonacci line at 77.54, but though prices have expanded the range a little, it seems the market is unwilling or indecisive to move away from this 50% Fibonacci line for now. Spot gold, a sixth bearish black arrow yesterday and a longer one than the previous ones, with the top side capped by the breached, broken, but seemingly repaired bright red upper time currently at 26.63 of the late June to late July bullish shift pitchfork. I repeat again what I said late last week, and I quote, "I'm now thinking that we might be seeing the very recent rise perhaps becoming a bit stale," end of quote. And prices have moved lower, but down only towards the next support below, which is the lesser projected Fibonacci line at 26.02 of all things. However, all that being said, we are still not too far from the all-time high at 26.85 and the 100% projected Fibonacci line at 26.75. All this tempers somewhat the break higher from the previously well highlighted April to September broadening top pattern, though it does not negate it as yet. Looking back at the bright red shift pitchfork, which has been guiding prices higher throughout the summer and may do so again into autumn, and we will have target X1 topside, the secondary harder to reach target up in the 26.96 area for the original move up and out of the broadening top pattern. The primary target in the 26.28 area was achieved 2 weeks ago. Now, so far today, a further gentle dip, but still within yesterday's range.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.